To get started with moving average trading on TradingView, you need to understand what a moving average is. A moving average is a trend indicator that shows the average price of a security over a certain period of time. There are two main types of moving averages: simple moving average and exponential moving average. The simple moving average gives equal weight to all the days in the period, while the exponential moving average gives more weight to the recent days. To apply a moving average to a chart on TradingView, click on the Indicators button at the top of the screen. Then type moving average in the search box and select it from the list. You can then choose the type of moving average you want to use, the length of the average, and the source of the data. The most common lengths for moving averages are 50 and 200 days. The 50-day moving average is used to gauge the short-term trend, while the 200-day moving average is used to gauge the long-term trend. To use moving averages for trading, you need to look for crossovers. A crossover occurs when the short-term moving average crosses above or below the long-term moving average. When the short-term moving average crosses above the long-term moving average, it is a bullish signal, indicating that the price is likely to go up. When the short-term moving average crosses below the long-term moving average, it is a bearish signal, indicating that the price is likely to go down. You can also use moving averages to set stop-loss levels. A stop-loss is in order to sell a security when it falls to a certain price. By setting the stop-loss at the moving average, you can limit your losses if the trade does not work out. Additionally, you can use moving averages to set take-profit levels. A take-profit is in order to sell a security when it reaches a certain price. To get the most out of moving average trading, you need to combine it with other indicators and strategies. You can use other trend indicators, such as the relative strength index, to confirm the signals generated by the moving averages. You can also use chart patterns, such as triangles and wedges, to identify potential trading opportunities. By following these steps and combining moving averages with other indicators and strategies, you can create a powerful trading system that helps you make informed investment decisions. Remember to always backtest your strategy and use proper risk management techniques to minimize losses and maximize gains.